Insurance professionals work hard every day to keep people safe, but as technology transforms the industry, how can insurers protect not only their clients, but also shield themselves from ever-changing cyber risks? My name's Elizabeth Blossfield, and I'm the host of the Insuring Cyber Podcast, a monthly look into how the world of cyber and the business of insurance are connected. Hi, everybody, and welcome back to the Insuring Cyber Podcast. Artificial intelligence continues to reshape the insurance industry, and as insurers look to modernize underwriting, AI is becoming a foundational business capability rather than just another tech trend. In this episode, I spoke with two guests about this. First is Will Ross, CEO of Federato. He shared his perspective on how AI adoption has evolved across the industry, why context, not just data, is becoming the key to successful AI implementation, and what separates the insurers that are gaining a competitive advantage from those that risk falling behind. Check out our conversation. Hi, Will. It's great to see you again. How are you doing?
Good to see you, Elizabeth. Thanks for having me.
Yeah, thanks for taking the time. I'm looking forward to this discussion. I know we talked at the beginning of the year and you sent over some predictions for 2026. So I'm kind of interested in talking to you about how some of those played out relating to, AI and data and insurance. So I guess just to start off, I know that you mentioned that 2025 kind of marked the shift from AI being seen as a trend to more of a foundational capability in underwriting. So what are some of the changes that you've seen that have led to that?
Yeah, I think there's a couple aspects to this. First, I'd start with, the change in how it's being seen. We have to accept the reality that the way businesses are going to shift their adoption of this technology ultimately resides with senior leaders. And probably the biggest thing that I've seen is that there really is a pent-up desire for change and transformation among senior leaders in insurance. And critically, over the last year, what I started to hear was, I am using this technology not just for personal use, but for work in my day-to-day, right? And when you start to see senior executives having that sort of posture, right, what you also start to see is they were in the individual contributor roles and managerial roles that they're trying to enable with these technologies not that long ago. Even if it was 25 years, they remember how these jobs were done. And so what we're really starting to see is people build an intuitive understanding of, I now understand that the way this part of that job was done will not be the way it is done in the future. And people really are investing in, how can we change the way insurance work gets done? And for us, that's always been our mission at Federato. And so it's a really compelling time to be around the industry.
Yeah, that's great. And I love that perspective because it does seem like there's been a shift in insurance where it's gone from this fear that AI is going to take over people's jobs and lead to harm to, it's actually a tool that can help us grow and work in partnership with humans. And I know that you also... Yeah, go ahead.
Sorry, I was going to say, I heard something the other day that I think might really resonate for our listeners here, which is, the focus continues to be on underwriting. But I think there's an acknowledgement that what it means to be an underwriter may change, and that's okay. And that was something that I just thought was really compelling, right? You can have a desire as an industry to still focus on the discipline of underwriting and making sure that that balance of analytical judgment and human judgment is still there. But we can't over-venerate what it is meant to be an underwriter historically in the pursuit of that. And I thought there was a very healthy perspective a CEO shared with me a while back.
Yeah, that is really interesting. And I'm glad you brought that up because that kind of leads into my next question as well, because I'm curious whether you think, there are still some challenges with adoption of AI and new technology. And do you think those challenges are purely technical, or do you think they come from more of a talent and mindset gap, or is it a little bit of both?
It's so funny. I think there's a little bit of both for sure. I just sent an email just a few minutes ago to a senior leader in an insurance company. And it was about someone that we both know who's coming right out of his undergraduate. And we were just sort of going back and forth on, people are slow to hire young folks coming out of school right now because they think, AI is going to scale my more experienced labor. But we were both looking at this individual and we were looking at the sorts of school projects. They had sent us what's called a Jupyter notebook, basically a large Python code file showing a LSTM based transformer model. So think like taking an LLM and building like a predictive model using that LLM to create sort of a vector representation of some underlying data. That all sounds really technical, doesn't it? And that's the point. There are people coming out of undergrad right now who have these skills that I think are being so underappreciated. So what I'm actually really optimistic will happen on the talent side is that we're actually going to see a resurgence of people investing in young talent, because that young talent is starting to see some of the stuff that sounds very technical as table stakes. This is someone coming out with not an overly technical degree and yet still has that level of understanding. That's different, right? At the same time, on the technical side, I think the barrier that we will continue to run into as an industry is our technology is unfortunately an extra generation older than the average industry. Putting it bluntly, insurance really did miss the cloud, and I don't think that was a bad thing. But as you look at where sort of the open source ecosystems and software for using these LLMs and other forms of AI are gravitating towards, they're really gravitating towards software systems that were built up in the sort of cloud native era. In our industry, we're instead served by a group of 8 companies that we call the old core. Their average age is 36 years old. 7 of the 8 are backed by private equity, meaning their ability to continue investing in R&D is limited. And they've been built up through time, really through 90 plus acquisitions. And if you think about what it really takes to systematize and operationalize AI in your environment, it's going to need to be able to get data, or what we call context, in and out of these systems. And that's a real barrier we're going to have to overcome.
Yeah, that makes sense. And I remember we touched on this a little bit at our conversation at ITC last year. And I know that you predicted for 2026 sort of the end of small scale AI pilots that are bolted onto these legacy systems. And instead, we'll see more benefits from AI native platforms. Can you talk about that shift as well, and how agentic capabilities and AI native platforms are becoming more important?
Yeah, absolutely. I think people have done these pilots. They've proven to themselves between the pilots and, again, their personal use that there's value here. They've also recognized that the skills to deliver these capabilities are highly in demand, and that these are going to be meaningful investments to drive scale. But what I think is really causing the shift out in the environment right now is people are realizing that AI is more expense. And so what they're starting to say is, I can't afford to just absorb that as incremental expense. Something has to go, right? And so that's really what we're seeing out in the marketplace right now, is people are starting to look at, what are the legacy systems I can retire? How can I not just tack something onto my old core system, but rather, how can I, in the process of replacing that core system, right, that old core system, end up on an AI native platform that is both and. It is both the AI native functionality that I expect, right, and the sort of table stakes components that I know I need to operate my business. And so that's really an evolution we've seen as people take these things on. Is, yes, they are leaning in, but they're also realizing that leaning in is not going to be free, and that therefore they're going to have to find ways to remove expense, while making that investment, so that there's more of an overall balance. They're not willing to just trust in the pure productivity ROI. They need to see hard expenses coming out of the business. And to be honest, we're seeing more focus on that being tech expense than people expense, because they're already dealing with a people problem. There already is a perception of a talent shortage, more than there is a feeling that I need to jettison employees. So again, this gets back to, I just don't see the job of the underwriter going away, or there being no opportunities for underwriters in the future. If anything, we see a retiring workforce, and a group of executives who are focused on, how do I retire legacy technology costs to iterate into this AI native generation so that my people can continue to be enabled. I think that's a really healthy evolution.
Right. Yeah. It's a healthy balance between the use of tech tools and the people behind insurance as well. And I know you've said before, and you mentioned it earlier in our conversation, that context is king. So can you talk about the importance of the data that's used for AI and some of the best strategies to make sure you're training your models with clean data?
Yeah, sure. So, I think it's important, that last thing you said, which is training models is, yes, if you are building models and training them, clean data is table stakes. At the same time, so much of what the current AI evolution is about is that you don't have to train models anymore. right? The point of a GPT, right? The P stands for pre-trained, right? And so the point of a GPT is that it's a generative pre-trained transformer, meaning that you are able to take the fact that this model was trained on really the English language holistically and has a very broad-based understanding. And you're able to just basically point it at a broad set of problems and have it help you solve those problems, whether that's in a chat-like interface, which is what many of us have been familiar with, or it's something more what we would call agentic and actually requiring action be taken. Now, the critical aspect of that becomes is now the story about data is not so much about clean data for training, rather it's about context. And the key to context has a little bit to do with cleanliness as well. Cleanliness can still matter, but probably the bigger challenge with context is that you can't just dump all your data to an LLM and say, figure it out. It's a little like if we were sitting in a room and a song came on the radio, right? And I asked you, who sings this? You're not going to think about all the music you've ever seen historically to try and identify that answer. The first thing you're going to do is you're going to go, this is a female voice. Well, I just took half the singers in the world off the table, right? It's almost like there's a filing cabinet. So now I'm in the female singers drawer. And then you're going to go to the 80s folder because you're like, I'm pretty sure this song is from the 80s. And then you're going to hear a key lyric that's going to make you go right here and go, this is Madonna, right? That ability to sort of take context and narrow it down dynamically in a way that these pre-trained transformers, these GPTs, these LLMs, these AI systems can use them correctly. That is really what creates capability. And unfortunately, it is exactly what these old core systems really struggle with, right? And so this is going to be a hot button topic for these organizations because they're going to know what these technologies are capable of, but they're going to continue to find themselves confused as to why the old core technologies they sit on can't just do it. And it really does come down to this idea of what we would call context engineering, or sometimes you're starting to hear a term harness engineering. How do you take this large bulb of data and make sure that you're providing just enough that the system can actually be effective and efficient in using them?
Yeah, and that's a helpful explanation of why the use of data is so important when training AI. And I love the analogy to, hearing a song and trying to pinpoint where it's from, because that's a helpful explanation to how this all works. And I think sometimes we get overwhelmed by how complicated it all can be. And I know we've spoken a lot about the evolution of insurance and some of the opportunities and the challenges ahead, but I'm curious over the next couple of years, what will separate the insurers that are winning with AI from those that are sort of falling behind?
First of all, I just want to say that the winning versus falling behind point is really important. One of the big trends we're seeing in insurance right now is Accord just released a study that says 47% of insurers destroy value. Now, they've run the same study over a number of years. And when they say destroy value, what they mean is their actual underwriting discipline is not actually creating profit. The only way they're profitable is through their income or through their interest income. And what's crazy is just 4 years ago, that number was closer to 10%. And we've been in a hard market. So in an environment where everyone is taking rate, underwriting profitability has actually suffered on average. It's interesting that the number is just shy of 50%, because the other thing we're seeing is the emergence of this trend in the combined ratios, right? As you look at combined ratios across the industry, you're starting to see what we call bimodal distribution. And what a bimodal distribution means is one group has an advantage. Think kids who had access to a test bank and were cheating on a test. What you'll see is, well, the average population got a B, but a group of people all seems to have gotten A's because they had access to this. So you'll see a little bump out in the curve. Think like a big normal distribution with a little bump in the curve. So that's a bimodal, a second mode, a second kind of average. Well, what it typically means is exactly that. Someone had an advantage. Someone cheated. And so as we start to see a bimodal distribution of combined ratios, what we're seeing is there clearly are organizations that are advantaged in the marketplace. And I would argue that the organizations who are advantaged out in the marketplace right now are an advantage in terms of their risk selection. We are seeing massive investments on the brokerage side into how to find a market for my risk. If you as a carrier are not putting up equal defenses relative to how do I sift through all the noise and find the risks that are actually the right fit for me, you are prone to being the victim of the adversarial selection or adverse selection, right? that is what causes this bimodal distribution. To put it bluntly, they're organizations who are just basically collecting the worst business from brokers. And they're organizations who have established the discipline and the walls to prevent that from happening. And that is what's driving this bifurcation. And I think that bifurcation is only going to get magnified as the brokerages continue investing in AI and as certain carriers, as you called them, the winners, continue investing in AI. And I think we are going to see maybe not carrier failures, but carriers who really do become losers in the marketplace. And very likely what will end up happening is there will be consolidation events as those carriers get folded into larger organizations, et cetera, as the best outcome for their shareholders.
Yeah, it'll be interesting to see, what happens. Lots of opportunities. And like we talked about, lots of challenges ahead. But it's an exciting time with AI and insurance. And this has been a helpful conversation. So thank you so much for taking the time today.
Yeah, thank you for having me, Elizabeth.
As Will mentioned, AI is everywhere in insurance right now, but there's a big difference between a flashy demo and a system that actually works at scale. For this episode, I also spoke with Rafael Broshi, founder and CEO of Notch, to talk about what it really takes to bring AI into day-to-day insurance operations. Rafael and his team started out as a specialty MGA before pivoting into AI, so he's seen firsthand just how much of insurance still runs on manual processes and repetitive work. In our conversation, we talk about how AI agents can automate workflows across claims and policy servicing, and why human expertise will remain essential even as automation grows. Rafael also shares his views on what insurers should look for in an AI partner, and why the next 18 months could be a defining period for AI adoption in the industry. Check it out. Hi, Rafael. It's great to be speaking with you today. How are you doing?
Hey, Elizabeth. I'm good. How are you?
I'm doing really well, thanks. Yeah, thank you so much for taking the time to speak with me. I'm really interested in learning about some of the work that you do at Notch and how you're seeing AI being used in insurance. So, just to start from the beginning, I know that you originally founded Notch as a specialty insurer before pivoting into an AI platform. And I was curious if you could talk about that and some of the gaps that you're seeking to fill with the use of AI in insurance.
Sure. So we started as a specialty MGA a few years ago, and the first thing we stumbled across was how many manual processes you have to be knowledgeable in to really run a managing general agent, which is somewhat like a broker with expanded capabilities. And what we've seen is that, first of all, there is a lot of problem when it comes to the customer experience part, where you need to help the policyholder throughout the entire policy lifecycle. Second, a lot of back office operations relevant to bordereau, document ingestion, and the like. And after we decided to pivot towards building a solution for the insurance space, that was what we had in mind. Our experience as an MGA and how much of the entire workload sits actually at manual operations that we believe with today's technology can be mostly automated.
Yeah, and it's really exciting the work that you're doing, because I know that AI has been big in insurance, but it's taken a while for, I think, insurers to kind of get their arms around it. And I know that you've mentioned that most enterprise AI is still kind of stuck in demo mode. So what are some of the challenges with scaling these AI pilots, and what are the best steps to ensure growth?
I think what we're seeing now is that with the Gen AI technology, it's very easy to create demos, and we hear a lot about vibe coding, which makes management think that this could be built internally with a very small amount of resources. But the difference between 70% accuracy rates or 80% or handling just a happy flow without any edge cases and real production environments is completely different. Like everything in life is a Pareto rule, meaning you can do 80% with 20% of the work. But scaling that kind of 80% of the use cases or 80% accuracy, that's the extremely hard part. So to actually build a system, an agentic system that solves workflows or cases or use cases in production, you have to build a very, very robust system. And it's everything from the infrastructure related to latency, related to not having problems with vendors when it comes to inference and AI management, and all the way to analytics, QA, regression testing, and a lot of different things that you need to do to run those kind of agents in production.
Yeah, and you mentioned, as just mentioned, that the real opportunity with AI and insurance is that end-to-end workflow automation. What are the benefits of that type of approach?
Well, the benefits, I think, are twofold. First, and the first derivative of using AI agents is efficiency across the organization. So at the end of the day, as an enterprise, you want most of your employees in the organization to do high value work. And with today's technology, you can take the lower tier of the work and essentially take those people doing that manual labor. It doesn't necessarily directly help your top line growth and move them into other places of the organization. That's the first derivative. The second derivative, which I don't think the market is there yet, because we're still the first inning, would be once you automate those processes, essentially you have a central brain that controls a lot of data on the processes that were automatically resolved. And then you can use this data very effectively to increase the productivity of the entire organization when it comes to creating new products, iterating, solving policyholder issues. So essentially, the way to make the entire organization more efficient and not just look at an ROI in a very small part of the organization is to implement those systems throughout the entire organization and then use it to create better products and better experience for your policyholders. And in a commoditized industry where there are a lot of players competing with the same kinds of products to the same kind of people, service is essentially one of the only ways to really differentiate and speed of iteration. That is why startups sometimes do better than large enterprises with new technologies.
Right. Yeah, that makes a lot of sense. And as you mentioned, there's a lot of competition. There's so many players in the industry right now. And I know that you mentioned customer experience is one of the most important things. Do you have anything else to add about what insurers should be looking for with a tech partner or an AI solution?
Yes, I think there is a lot of competition out there, and it's very hard to distinguish the kind of players that are really AI native and the kind of players that are adding AI because you have to do that in order to sell today. That's one. And second, be wary of demos and point solutions. So at the end of the day, a carrier today might have one use case they want to focus on. But if they really build a roadmap, they're going to build a roadmap of 30, 40 different kind of use cases expanding throughout underwriting and sales and policy servicing and claims adjudication. So when you choose a vendor, and it does take time to understand and a lot of resources to test that vendor, you have to make sure you're not choosing a vendor that is only a one-trick pony. So you're going to get someone for that specific use case, but once you want to scale up, you actually chose a vendor that cannot. And one of the worst things for enterprises is working with 20 or 30 different vendors at the end of the day. So when choosing your vendor, you have to choose carefully, understand the roadmap, and understand what other capabilities that vendor has that are not specifically related to the kind of RFP or use case that you want to solve today.
Right. And you touched on this as well in one of your earlier answers, but you mentioned that sort of partnership between AI and human operators. So as you mentioned, AI agents can handle some of these complex end-to-end workflows, but how do you see the role of human operators kind of evolving along with this?
Yeah, that's a great question. We're not a company that believes that AI should replace all of human labor. And I do think that it really matters what is the kind of work we're talking about. And let's take for a carrier the claim adjudication process, putting aside regulation that forces you to have a human in the loop. At the end of the day, we think this is the right thing to do. Claim adjudication is a very sensitive process. It's the part that impacts the customer experience the most. This is where retention is done or churn. And I think when you look at the kind of points of the business, where you have an expert that has been trained for a long time to make those decisions, you want to retain and keep that person and help them become much more productive. So if an adjuster today in your company can handle 30 or 40 claims at the same time, we want to make that person able to handle 200 claims at the same time, plus reduce the kind of grunt work that the adjuster has. And what we've seen is that employee satisfaction also rises from using our products because the entire experience is much faster, much leaner, and you take away the parts of the process where people don't like doing, which are usually the repeatable grunt work process. For example, filling details within the CRM, writing summaries, transcribing conversations, or finding, needing and picking and finding the relevant data points out of a 200-page claim packet. So those are the kind of things we help with, and we boost the adjuster. We don't replace them. That's just one example.
Yeah, that's a great example. Some of that day-to-day work that gets kind of boring for humans and AI can handle really efficiently. So yeah, that makes a lot of sense. And I'm curious kind of, we've spoken about a lot of different things, but overall, how do you expect the insurance industry to keep evolving as more insurers are using AI?
So I think unlike past waves, and take the cloud wave, for example, where it took insurers a lot of years to move to cloud, and some of them or most of them still have the majority of their operations on-prem, because I believe that there isn't a real tie between moving to cloud and improving your competitive positioning in the market. I think the AI wave is going to be completely different. And throughout 2027, I believe that most large insurers that are forward-looking and most innovative CIOs will adopt AI solutions. Currently, around 20% of insurers say that they have some sort of AI agent in production. I believe that will increase to 70 or 80% within the next 18 months. And I think it's a must. I think carriers that are not going to implement those solutions now and work with the market and the vendors to try to understand what works and what doesn't are going to look back a few years later. So the whole method of being a late adopter and saying, okay, let's wait for other people or other companies in other fields to try it, and I'm going to adopt this technology once it's mature, this is not going to work, because there's a lot of cultural behavior change within the organization, a lot of changes within IT, a lot of investments that have to be made. So carriers and other companies that don't start today are going to fall behind within the next 18 months.
Right. Yeah, that makes a lot of sense. Lots of change ahead. It's exciting to see where things might go, and exciting to learn about the work that you're doing at Notch too. So thank you so much for taking the time to speak with me today.
Thank you very much for having me, Elizabeth.
Well, that's all for this episode. Thanks to Will and Rafael for joining me, and to all of you who tuned in. Check back next month for another episode of the Insuring Cyber Podcast. And in the meantime, you can check out all of our previous episodes at insurancejournal.tv or wherever you get your podcasts. As always, feel free to reach out to me at eblosfield@wellsmedia.com. Talk to you next time.